Hi, everybody. My name is Tommy Rosen, and I am the founder of Recovery 2.0. And I'm very honored and grateful to have Jim Dew here with us today. Jim is a financial advisor. I call him a financial wizard. He helps people to approach their financial world with more clarity, with great strategies, a lot of support and guidance along the way. I asked Jim, he's a friend of mine, and I went out on a limb and asked him if he would share his knowledge and wisdom with regards to the financial reality right now during this COVID weirdness, this COVID era that we're facing right now. The United States government has released an aid package. People are in a great state of transition. Whether you have just been let go from a job, or you're an existing employee somewhere, or an independent contractor somewhere, or you own a business as an entrepreneur or a corporation. There's a lot of different looks at this thing and a lot of confusion out there. So I thought, let's come together and let's get great information from Jim, and let's use that information to help ourselves move forward with greater clarity. So without further ado, Jim, thank you so much for your willingness to give us your time and attention on this matter at this moment. So grateful.
You're very welcome, Tommy. I'm really happy to be here. And some people might wonder why they should listen to me, and I think experience is part of that. I've been advising folks for over 25 years, and I've helped people survive and then thrive through the 2000 to 2002, what they called a tech wreck, and the 9/11 terrorist attack, the 2008 financial crisis, and then now this COVID crisis that we're facing. And I'm happy to lend some of my experience and what I've seen others do to be successful through these kinds of times.
Amazing. So you have a particular format I know that you speak to when you lecture, especially this last few weeks, about COVID. And I want to just give you the freedom to speak to each of the topics that you spoke to me about.
Okay.
And we can get this information out far and wide.
Sounds good. Before I do that, I'm just going to say something that I've been telling everyone. I call it the triple A approach. And the first A is for acceptance. The second A is for awareness. And the third A is for action. So it's easy in times like this not to accept some of the reality of what's happening. And I think, and of course, in your teachings, you're so brilliant at doing teachings about how to become in touch with who you are inside, which of course is all that matters, is who you are inside and how you relate to the world from that perspective. But acceptance is really important, whether you've lost your job, whether you're afraid of getting sick, whether you have a relative or a friend who's gotten sick. We need to have some acceptance about what is really going on. And then the next thing is awareness. Awareness about your situation, awareness about others. And then the third A is action, because we can accept and we can be aware, but if we don't take action, it really doesn't do us any good. So think about those three A's as I go through these different things. So I came up with an acronym. Now, surprise, out of the blue, I came up with this word COVID, C-O-V-I-D. And I use this to get you to think about how you can get through this challenging time. And I would submit this will work at any time, but especially now. So the C in COVID stands for cash. And during hard times, having cash is very important. So the first thing I want you to do, I want you to think of cash in three ways. The first thing is, what do you have that's cash? So take an inventory. What are your checking accounts, your savings accounts, your money market accounts, your CDs? What are things that are really cash? And I want you to really take an inventory and see how much that is. The second part of cash is what can be converted into cash. So this could be a stock and bond portfolio, though you probably don't want to sell out of that now if you can help it, but that could be turned into cash. Sometimes certain types of real estate can be turned into cash. What are things that can be turned into cash? And then the last of the three parts of cash is access to cash. I'm going to spend a little more time on that now. So what are some of the ways you can get access to cash? You might have a credit card. You might have a line of credit. A couple of things that people don't think about. If you have a life insurance policy that has cash value in it, you might be able to take money out of that life insurance policy as a loan. So think about all the ways that you have access to cash. And I want to make it just a couple of mention about credit cards and lines of credit. If you have credit cards, If you want to get more credit on your credit card because you're concerned and you still have good credit and you feel like you can get that, you can go to your credit card companies and ask for more credit. The first way I would suggest you do that is ask for a no credit inquiry increase in your credit line based on your history. Because whenever they do a credit inquiry, it hurts your credit. So try that first. If you're going to have them do a credit inquiry, if you're going to do more than one card, do them all at the same time. You don't want to have 10 different cards hitting your credit at the same time. When it comes to lines of credit, whether you have a personal line of credit at the bank or against your house, or you have a business line of credit, it's important to think about having two banking relationships in your life. And I know that seems a little complicated, but I like to think of the bank where I have the money that I owe and the bank where I have the money that I own. Why do I want to do that? I'll give you my own personal story. In 2008, which was called the financial crisis, and it was a pretty scary time, I had an $800,000 business line of credit at a bank, and I actually sat on the board of directors of that bank at the time. I was nervous because of everything going on, and I was afraid that banks might start closing lines of credit, which it turned out they did. So I pulled that $800,000, but guess what? I put it in a different bank. And the next board meeting, about a week later, I saw the director of our chief credit officer, who was a friend of mine, still is today. And he came up to me and he said, "Hey, Jim, I noticed you pulled your line of credit." And I said, "Yeah." And he said, "Where'd you put the money?" And I smiled and I said, "Wouldn't you like to know?" And in a funny way, he laughed because he knew that if I left it at the bank, if there was a problem, they could grab that collateral. But because it was at a different bank, I was in control. And if I had needed that money, I could have negotiated with the bank on a payment plan or interest only. I could have worked it out. But if I had the money at the same bank, I couldn't have had that opportunity. Luckily, I didn't need the money. I paid the interest happily over a couple of years. And when I felt everything was fine, I paid off that line of credit. So think about having more than one banking relationship. And if you're trying to get some of these loans that are put out there by the government that I'm going to go into in a second, you'll find out that if you're having a problem with one bank and you don't have a banking relationship, you can't start one now. All the banks are just flooded with people. Yes, Tom.
So quick question. So just going back a couple steps, in terms of getting a credit inquiry increase on your credit cards, you said try to get those all done at once, at one time?
Yes.
Because if you do them at different times, each time you do it, they'll ding you.
Yes.
On your credit. But if you do them all together,
yes,
they won't ding you all up all the different times for each credit card?
They'll just hit you once for the credit inquiry. And there's actually services that you can find that will do that, so that they bring it all together and they just ask for your credit check one time for more than one card. Okay,
so that's one thing. The other thing is you spoke about a line of credit.
Yes.
And so I just wanted to emphasize for people, in case this is really for people who have an established line of credit, that they might decide to take that line of credit out as cash at this time. But you're not necessarily suggesting, because we're not in the same kind of crisis, that they put that in a different bank, or are you?
If they're worried about either, and right now I'm not worried about the banks the way I was in 2008, but if you're worried that your financial situation could deteriorate to a point where the bank's going to say, we want to close your line of credit, yes, they could close your line of credit without asking you. You get a notice, your line of credit is closed, you don't have access to the cash. So if you're concerned that your numbers are deteriorating or you could need that money, I'd rather see you pull it and put it in a separate bank. That way it keeps you in control.
And of course, if you pull down the line of credit, you will be responsible for paying the interest payments on that line of credit.
Exactly right.
Okay, thank you.
Please. Yeah, you're welcome. You're welcome. And one thing I'll mention on credit, and by the way, some of these lessons you may think, well, you know what, I don't have a line of credit, I can't get one right now. But these are seeds for the future. A lot of the things that I've done well, I learned from the mistakes I made in the past. So even if you're not in a position to do those things, think about in the future, if you have a business, as soon as things get better, get yourself a line of credit, you know, those kinds of things. Since we're on credit, because credit is so important, one thing that a lot of people don't know is if you charge more than 50% on your credit card at any time during the month, doesn't matter if you pay it all off at the end of the month, at any time during the month, if your balance is over 50% of the available balance, they hit your credit score as if you have fully charged your credit card. It's a negative to your credit. So the best is, and I know this will sound crazy, but the best credit score happens if you never let any card get ahead over 10% of the available credit at any time during the month. Now, I know no one's going to do that, but the next level is 30%. If you never let your credit card balance go above 30% of the available credit at any time in the month, your credit score stays much higher. So what Mimi and I, you know, my wife Mimi, what Mimi and I do is we have alerts on our credit cards. So as soon as it gets close to 30%, I think we have a limit trigger at 25%, we make a payment. So we may make 3 payments a month because we always want to keep that level down below. Now, this may sound like a tip for when things are normal and things are good, but just to keep in mind, and while it was on my mind, I thought I'd mention it.
Beautiful. Thank you.
Let's talk about other ways to get access to cash. So a lot of people don't know that if you do have a portfolio of stocks and bonds, you can get what's called a securitized line of credit against that portfolio. Almost pretty much every that I know of, custodian or institution that would hold a portfolio like that will give you that line of credit, depending on how much stocks and how much bonds. It could be 50% of the balance, it could be 80% of the balance, but whatever it is, that enables you to get access to cash without selling your portfolio when it's down, just so you know. Don't let the broker do a margin loan, because those are usually a much higher interest rate than a securitized line of credit. So there's a way to get a line of credit if you don't have a line of credit at a bank or something like that.
Sorry, one more thing.
Yes.
On that note, so let's just bring it into concrete terms. Let's say you have $50,000 of value in your current stock portfolio.
Yes.
Obviously, likely it used to be a lot more.
Yes.
But right now, it's at 50,000. And what you're saying is I could take out a securitized line of credit of maybe up to 50% of that value.
That's correct.
Or $25,000.
Yeah, often these custodians will have different levels of minimums. So they may say, if you have $100,000 or more, we'll give you a line of credit for half of that.
Okay.
They may say a 50,000 is too small. It would just depend on your provider. You'd have it ask them. Certainly, if you had a $300,000 portfolio or $1 million portfolio or bigger, they're going to give you a line of credit against that portfolio.
Okay. For those who are just joining, we're going over the C in COVID, which is standing for cash. And we're really looking at all the ways that we can get to cash if we need cash right now. So thank you. Thank you, Jim.
Let's jump in and talk a little bit about the SBA and the government and the CARES Act, because this is access to cash. I put this in the category of access to cash. And there's a lot of things that they've done that will give you access to cash. So I'm going to cover a couple that haven't been talked about that much. And then let's go into the PPP, the Paycheck Protection Program loan, because that's been talked about a lot. So a lot of people don't know this, but in the law, they made it where you can, if you qualify, and I'll tell you what that means in a second, you can take out $100,000, up to $100,000 from your IRA or your retirement plan at work with no pre-59.5 10% penalty. So if you're under 59.5, and normally if you took money out of your IRA, you would pay a 10% penalty. So they're waiving that. You can take 100,000 out of your IRA or your plan at work. There's no 10% penalty, and you don't have to pay the taxes right away. You get to spread them over 3 tax years, 2020, 2021, and 2022. And it gets better. If you wanted, you just need the money now, but you decided you wanted to put it back in. So 6 months later, you're okay, you don't need the money. You can actually put it back in over the next 3 years, and then it's like you never took it out. If you keep it out, you can spread the tax over 3 years, but you might not want to do that. You may want to pay the tax in 2020 because this may be a very low income year for you. But they've given that access, $100,000 from your IRA or your retirement plan. The other thing along those lines is you can actually take a loan from your retirement plan at work if your plan provides a loan, and they double the amount. It used to be you could take a $50,000 loan. Now you can take a $100,000 loan, and you don't have to start making payments on that for 12 months. So those are a couple of things that apply to a lot of people on the call that would give you access to cash that's in the CARES Act that's not being talked about a lot.
Thank you so much. My God. So that will apply to any employee.
Any employee, absolutely.
Okay. Thank you.
As long as you have money in one of those plans.
Got it.
You can take out. Yeah. And so that is a couple of things. Let's talk a little bit about the big one that everyone's talking about, the PPP. This is the Paycheck Protection Program loan. I'll tell your listeners what it is in case you haven't heard of this, but who applies to it applies to employers who have less than 500 employees It applies to independent contractors. So if you're an independent contractor or a sole proprietor, and in other words, if you file a Schedule C on your tax return, if you know much about how that works. But if you're a sole proprietor or an independent contractor, you can apply for this loan. And if you're a business owner with fewer than 500 employees, and there's some other exceptions, but I don't think you have a lot of listeners that have a company that has more than 500 employees with it. So what this loan allows you to do is you can get as much as 2.5 times your 12 months average payroll costs times 2.5 times that. So if your average payroll costs, and by the way, in the law, it says last 12 months, but in all the applications I'm seeing from the banks, it says 2019. So I'm gonna go with what I see in the practicality, what's actually being done out there. So you take your 12 months of 2019, your payroll costs, which by the way include benefits, it includes retirement plan contributions by the employer, it includes health insurance that's paid by the employer. It does not include payroll taxes paid by the employer, but it includes most things in the payroll. You take those average, the 12 months of 2019, you average that. If your monthly average, and I'll just use round numbers, is $100,000, you can get a $250,000 loan. If your average is $10,000, you can get a $25,000 loan.
Your monthly average?
It's the monthly average from the 12 months in 2019.
Okay.
So you take those months, add them all up, divide by 12. That's your average monthly payroll. And the banks are going to help you with this calculation. Maybe help's not the right word because a lot of banks are not being very helpful. But the banks are in charge of having you fill out the things the way they want you to fill them out.
Yes.
So once you have that, that loan is a 2-year loan. It's a 1% interest rate. No payments for 6 months. It's a non-recourse loan. You don't have to sign a personal guarantee. And then here's the ultimate piece. It's forgivable. So it could be forgiven. And the way it's forgiven is if you spend it on payroll costs and a few other things, rent, lease payments, interest on mortgages within the business, or utilities, all of those, the lease, the mortgage, the utilities had to be in place prior to February 15th. If you spend it on those things, it can be forgivable. Now, the Treasury just came out with guidance that they said at least 75% has to go toward payroll because the spirit of the law was to try to help employers keep people employed. So if you pay for it on those things, it's forgivable. And most loans, when they're forgiven, they're taxable to you. But in the law, they said this is non-taxable forgiveness. So just a tremendous opportunity.
Okay, so I just want to reiterate, make sure that I get it and that others get it if these questions come up for other people as well. So we're talking about the PPP, the Paycheck Payment Protection.
Paycheck Protection Program loan.
Thank you, Paycheck Protection Program.
The PPP.
PPP. And this is for anybody who owns a business or sole proprietors.
Or independent contractor. You can do it for yourself.
Or independent contractor.
If you're a business owner and you're paying employees and you're paying 1099 independent contractors, the money you're paying to independent contractors does not count in your payroll toward your loan calculation. And the reason why it doesn't is because that independent contractor who you're paying can use the money you're paying them toward their own loan and loan forgiveness.
So I have no employees, but I have independent contractors. So can I apply for this and pay my independent contractors? You're saying no.
You can apply for it if you pay wages to yourself.
Okay.
That would count. But the money you pay the independent contractors does not count towards your calculation.
Yes.
But the independent contractors you paid, they could use that for their own calculation to get this loan. And remember, these don't have to be big numbers like $250,000. If your average for independent contractors, Schedule C and sole proprietors, the way it is, if you're not sure because you're not paying yourself payroll, you're an independent contractor, it would be your net income on Schedule C that could be used. But let's say that's $10,000 a month, right? Well, that could be a $25,000 loan. And by the way, there is a couple other limitations on what you can use for payroll, whether you're an independent contractor or you're a business owner. You can't use above $100,000 compensation for any one person. and you can't use any compensation paid to people who are not primary residents of the United States. So if you're a primary resident of another country, you don't qualify to be counted in this.
Okay. But if I'm an independent contractor,
Yes.
I can apply for this, and I can get 2.5 times my average monthly payroll.
Correct. And if you don't have payroll, it would be your average monthly net profit from your independent contractor business.
Okay, and I have to use those funds, 75% of them at least, to pay other people that I have to pay as part of my business.
If you want forgiveness, you have to use at least 75%. It's the first 8 weeks after you get the loan. It has to be 75% or more toward payroll or those kinds of forgiveness issues. And you can't use any of the money for anything you want. So even if you don't qualify for the forgiveness, if you don't qualify, it's a 1% loan, 2 years has to be paid back, 6 months of no payments, but you can't go out and buy a car with it. You still have to use it for the definition of all those things that I mentioned that are within the CARES Act, because the government doesn't want to give you money at 1% to let you go buy a car.
Thank you so much. I'm getting it. I hope everybody else is too. Let's go on.
One other thing about forgiveness for the business owner is to get forgiveness, you not only have to spend it on the appropriate things, but you also have to keep people employed, because that was the spirit of the law. So there's a couple ways they test that. So one way they test it is they find out what was your average number of employees, your average number of monthly employees during the covered period, which is February 15th to June 30th, as compared to either, now you get to choose, either the same period in 2019, so either February 15th to June 30th of 2019, or January 1st to February 29th of 2020. You have to compare it to one of those two, you get to choose. And if you've kept the same number of average monthly employees, that's checking the box toward the forgiveness, because there's another box you have to check. If, on the other hand, let's say you had 10 employees and now you have 8 average monthly employees, you're going to lose 20% of the amount you would have qualified for on the forgiveness. So it's just a ratio like that. The other qualification is they didn't want employers to cut pay. So if you cut an employee's pay by more than 25% who makes less than $100,000, so if you have an employee who's making $150,000, you cut them down to 100, that doesn't apply. It's if someone's making less than $100,000 and you cut their pay by more than 25%, any amount over 25% reduces the amount you get in forgiveness. Now, I know that sounds complicated because there's some moving parts in there, but I just want you to be aware that there are some things you have to do to get the forgiveness, because the spirit of the law is keeping your employees and not cutting their pay in half, you know, or some big number if they're down there low. And one other thing about the forgiveness is if you've cut all your employees because you thought, hey, I'm not going to be able to survive and now this loan is coming, you can still qualify for forgiveness if you hire everybody back by June 30th. Because the government also is saying, hey, you fired everyone not knowing this law was going to be passed. You didn't know this could save the day. If you go back and hire those people, you can still qualify for the forgiveness.
Okay, thank you.
You're welcome. Since we're on the CARES Act, I'm just going to finish up with a couple of other things. There's a couple other things. There's the employee retention credit. And by the way, I'm going to talk about the employee retention credit, and I'm going to talk about deferring payroll taxes. Neither one of these you can get if you get forgiveness under that loan we just talked about, the PPP loan. So you can't double dip. You can't get forgiveness over here and then also get something else to help you from the other side. So keep that in mind, because I would say at this point, if I were you and you qualify and it makes sense, I'd go for the Paycheck Protection Program loan because it has the forgiveness. It's a great deal. And by the way, the way you qualify is you have to attest, it's a certification. You have to say, I need this loan because of the uncertainty caused by COVID-19. Now you notice I didn't say, I've just lost half my revenue. I didn't say, I had to fire all my employees. I can't pay for inventory. I didn't say any of that. That's not part of the test. I didn't say I have no money in the bank. The test is, will I certify that I need this loan because of the uncertainty of COVID-19? So I don't know what's going to happen. I'm uncertain. I need this loan because I'm uncertain. So that's the way you qualify for that loan. And you need to get in line. There's about $349 billion that's been earmarked for that. And when the money runs out, unless the government does another stimulus package, that's it. So the employee retention credit, you qualify for this if your business has done two things. One, has a 50% drop in revenue, not profit, revenue. So that's an enormous drop. A 50% drop in revenue in one quarter in 2020 compared to the same quarter in 2019. The other way you qualify, which is the easier way, maybe that's not a nice way to say it, but it isn't as hard on the business, is if your business has been partially or completely shut down due to government order, local, state, or federal. So think about restaurants, think about, any business where they say, you can't run your business. Then you qualify for a tax credit against payroll taxes. So the tax credit is 50% credit up to $10,000 of wages per employee per quarter till the end of the year, until either it gets to the end of the year or you have a quarter where your revenue, remember it had to drop by 50%, is up to 80% of what it was in the same quarter in 2019.
Yes.
Or the government has opened up and released those restrictions that closed or semi-closed your business for an entire quarter. Either one of those comes true. And then the other one is the payroll deferral. And that is, you can defer your payroll taxes that you owe for the rest of 2020, half to December 31st, 2021, and the other half to December 31st of 2022. So you still have to pay them, but you get a time to pay them. Remember, both of those are not available if you get the forgiveness. So first I try to get the loan and get the forgiveness on the Paycheck Protection Program loan.
Great. Yep.
One other thing that this may apply to you, this may apply to your kids. If you have student loans that you're paying on, in the CARES Act, they gave you a respite. They said, no payments are necessary, no interest will accrue from now until September 30th. But here's the key. A lot of people think it's just going to happen. There is no government money fairy who's going to come around to us and help us do that. You have to call the loan provider and tell them you want to stop payments until September 30th. So please, for anyone you care about, your kids, or if you have a student loan, this is a great opportunity to give you some breathing space on those loan payments.
But you have to go after it.
You have to go after it. You got, remember my AAA, you have to take action, or a lot of this stuff isn't going to work. That's why I say you just got to, and I'll talk a little bit as I get farther down the letters, but I really think it's easy to sit and lean back and be afraid. And this is a time to lean forward, whether it's facing the fear or facing the opportunity, depending on your situation.
Thank you.
So that's on access to cash. As far as that's the C. The O is outgoing. So it's really important, whether you own a business or whether you're or you don't own a business, to have an idea of what's going out. What are the expenses? What are the expenses in your business if you're a business owner? What are the expenses if you're a sole proprietor or an independent contractor? And what are your personal expenses? Everyone should sit down and really take pen to paper and make sure you know what your personal expenses are. And if you do that thoughtfully, you're going to find some things that aren't needed, aren't necessary, aren't important. And I would say that's a great time to kind of tighten that up, to give you some comfort and figure out what you really need. It's also just a great life experience, life opportunity to think about what matters in my life. Because some things, when we really look at it, really don't matter. But you really want to have a grip on what is going out and how can you control that a little bit. Do not get rid of things that are necessary and helpful. So this is the other thing I would say. Right now, it's a more important time than ever that you have connection to people like Tommy, connection to each other, connection to programs like what Tommy puts on. Because ideas, connections, thought leaders, inspiration, all of that is going to help you in ways you might not even be able to imagine. But I can look back to both 2008, 2000, and 2002. And if I didn't have my connections to the right people, if I didn't stay involved in the right groups, I wouldn't have gotten to where I got. So think about that. Don't just think, oh, I don't need that. You really might need that, especially if it's something that's adding ideas and value and support to you at this critical time. So, and if you're an employer, also be careful about firing good people. If there's a way to keep your A players and repurpose them, get them to work on different projects that maybe you haven't gotten to in the past, get them to do things to prepare you so when things get better, you're going to be ahead of the pack. I think of the story about Toyota versus Volkswagen. So in the 1970s, we had an oil crisis in America, and Volkswagen was the leading automaker at the time for fuel efficient vehicles. And Toyota was just starting to come on the scene. Well, Volkswagen hid under their desk and they didn't spend anything on advertising. They just thought, no one's buying cars right now. And Toyota did the opposite. And what happened is Toyota took so much market share that when we got through the oil crisis, Toyota was a leader and Volkswagen never recovered and they were in second place. So think about things you can do in that way. I'm going to give you one more thing about outgoing. If you have healthcare costs, there's something you can do that a lot of people don't know about. It's the Qualified Health Savings Account Funding Distribution. It's a once in a lifetime thing. You can only use this once, but you have your HSA plan. You can actually take a distribution from your qualified plan, put it into your HSA, and then pay for healthcare costs directly, and that's a total tax-free transaction. You can do as much as $3,500, $3,550 if you have self-coverage, $7,100 if you have family coverage, and an additional $1,000 for each of those if you're over 55. So there's a couple ideas on the outgoing. If you have lease payments, so I just want to cover this. If you have lease payments, a lot of people are going back to their landlord right now and saying, you know what, I don't want to pay you for 3 months. There's a couple things I would say about that. One thing is, don't forget about people and relationships. If this is someone who you have a relationship with and who can help you in the future, if you step on them when they're down, are they going to be that helpful in the future when things are better? This is a great time to show who you are as a person, as a human being, and create connections in a way that's much deeper, because it's easy to be nice and kind when life is good. It's hard to be nice and kind when things are challenging. So let me just give you a scenario, and this is why awareness is important. Know where you are, know where your landlord is. So let's say, for example, I'm in a good position and my landlord is struggling. I could go to my landlord and say, hey, I don't want to pay you for the next 3 months. And let's say my annual lease payments are $100,000, that's $83.33 a month. So if he gave me the 3 months off, that would save me 25% or $25,000. But what is he going to think of me? Look at this jerk. I'm trying to survive and feed my family, and he comes in, kicks me when I'm down. I'm going to remember that. What if instead I went to him and I said, look, you're struggling. I'm in a good position. How about this? You need cash. I'll pay you $70,000 for the next 12 months. So right now I'll cut you a check for $70,000 to help you when you need it. It helps me too, because I get a 30% discount on my 12 months lease. He appreciates it. I'm happy. Now we've done something more, thinking about as a community, what can we do to help each other in a situation where one of us has some advantages and the other has some advantages. So just think about any of those negotiations or situations. I don't think it's a good time just to take advantage of someone or pressure them. Look, if you don't have the money, that's one thing, but also just try to be kind to people. It's important. I remember people were doing that to their, in Scottsdale, to their landscapers. It became like a game, like try to get everyone to pay as little as possible. And, we didn't feel like that was the right thing to do. So I think supporting people, in fact, we try to do the opposite. We try to give people extra money. I got my hair cut before they closed the salon. I gave an enormous tip to the guy that cuts my hair, just because I know he's going to not have any business for the next month. That helps me and my spirit, my soul. I do it for myself, but it's also just a way that you're going to be in a better mindset to get through these difficult times.
Yes. Jim, thank you so much for all that. That's such an important message, so heartfelt. Can you just say the HSA piece one more time, just quickly?
Yeah. It is the Qualified Health Savings Account Funding Distribution. It's the QHFD. If you do a search in Google, you'll find out about it. Most people don't know about it, but it's out there. It's just not talked about very much.
So if you have to have this particular account, or?
Yeah, if you have an HSA account, that's what it works with. You can set up an HSA account, but it can also be for, if you have a loved one that has medical expenses, this can be a way. Now there's certain deductions for medical expenses, but it's a very high threshold to get up to where those deductions actually help you. So that could be a way just to get some tax-free money to help you during this time.
Okay, thank you.
The V, so that was the C, cash, the O, ongoing. The V is variable versus fixed. So think about whether you're in your personal life or your business, what are your variable costs? And what I mean by that is costs that vary month to month. You can pay them, you can skip them. Sometimes you can pay more or less. And then your fixed, which you have to pay every month. So in your personal life, your fixed would be your mortgage or your car payment. Your variable might be, of course, no one's going out to dinner, but you could order out and pick up, or you could order things off of Amazon, or you could do those types of things that really are up to you. You could order a pair of shoes on Amazon. That's a variable cost. That's not a fixed cost. In your business, variable costs would be things like marketing and advertising. And like the example I gave earlier, you don't want to be so afraid to spend money on marketing or advertising that you end up just stuck. And then when things get better, it takes you 6 months to ramp up. Fixed side of a business would be your lease payment. Payroll is usually considered a fixed cost, even though lately it hasn't been fixed because some people have had to lay people off. So really list out what's variable and what's fixed. What do I have to pay and what can I decide? And then decide of those things, what's important to me. Of those variable costs, what really matters and makes a difference in my life. And then following along with COVID, is income. So what's coming into your business? What's coming into you personally? So if you're unemployed, the government passed a big unemployment bill, and there's a lot you can look online about this. But one of the simple answers is you go to your state to file for unemployment, but the federal government put on top of whatever you get through your state, up to $600 a week for 4 months through the end of July. So it's a significant number. So make sure you look into that, look into unemployment. Other things about incoming, obviously what we talked about, those loan payments and things like that could be money that's incoming. Other things that would be incoming is if you get a severance from your job, or if you're making money from your business. In your business, I think you want to split it into two categories: recurring revenue and one-time revenue. And if anyone's ever tried to buy a business, or if you sold your business, you know that recurring revenue gets a higher multiple on earnings than one-time revenue. And the same thing's true of income that you get. Income that's automatic is usually more reliable than income that comes in once in a while. So let's say you have a job where you have a salary plus bonus or commission. The salary is much more predictable, especially in this environment, than the bonus or commission. So have an awareness about what's coming in to my household and to my business right now. So that's the I in COVID. And then the D in COVID, the last one of this, and then Tommy, we can talk about anything you want, is decisiveness. And I was thinking the other day, I've been giving a lot of these talks, and I was thinking the other day of the movie Dances with Wolves. I don't know if anyone remembers the movie Dances with Wolves. So I enjoyed that movie a lot. It was a movie, Kevin Costner starred in it, and he played this army gentleman who was Lieutenant Dunbar. And he's out in this little fort on the frontier, and he's there by himself with his horse. And the Sioux Indian tribe starts coming in and harassing him. And he's sitting there off balance and afraid and doesn't know what to do. And one day he gets up one morning, and he gets up and he just says, I'm not going to just sit here anymore and not know what's going to happen to me. And he got up, he put on his uniform, he got on his horse, he grabbed his American flag, and had a lot fewer stars back then, and he rode to the Sioux Indians. Now think about that. When I saw the movie, I thought, this guy's crazy. He's going to march right to the Indians. They're going to wipe him out. And actually, making that move changed his whole life in that film, because he went to them and they respected that. They didn't kill him because he came to them, and they thought, not very nice to kill a guy who came to us. I guess the reason I'm telling you that is, no matter whether you have fears and uncertainties or whether you have opportunity, you've got to get up, you've got to put on your uniform, get on your horse, grab your flag. You've got to move toward it. You have to have courage. And what will drive you forward, I believe, is your life purpose. You all have a life purpose. You just may not have thought about it lately. And so I'll give you mine, and then I'll tell you a few you might think of for yourself, because you need something to pull you forward. I'm working probably like a lot of you crazy hours. I'm working more than I've ever worked in my 25 years of doing this. But the reason why I still have energy is because I get up in the morning and I think about my purpose. So my purpose, the way I see it, is I'm helping, because we specialize in working with entrepreneurs who have successful businesses. And so what I feel is every day I'm helping some of those entrepreneurs get through this time so that they can thrive in the future, or the ones that have opportunity, take advantage of the opportunity so they can achieve their dreams, so they can give back to their community, so they can help the charities and the causes they care about, so they can take care of their kids and their grandkids and their great-grandkids. So that's what pulls me. My purpose is taking care of those clients every day. Your purpose might be your family. You might think, hey, My purpose is to make sure my family gets through this, to be a strong leader, to love my family, to be considerate and kind, and to be a good role model. It might be your employees. I mean, we just talked about this act, which is trying to help people keep their employees. You might say, hey, without me running my business, those people may not have a job. They might not be able to support their family. So it might be supporting your employees, keeping your employees. It could be a charity. You might say, look, normally I give a lot to charity. This time it's going to be a struggle this year. I'm going to work through this because my purpose is to help those people or those animals or whomever, or the environment, whatever you care about in your charity. And maybe it's your own life experiences that you want to experience certain things in the future. You want to go to one of the live retreats that Tommy puts on and enjoy yourself in one of those events that creates community and life-changing experience. Whatever it is, you have to have a purpose. It's too easy for us to get caught up in the news and the scary times, because look, let's be honest, these are scary times. But that doesn't mean that there's been scarier times, right? You know, I think of Man's Search for Meaning. I don't know if you've read that book or not, but it's a wonderful book. It was written by
Viktor Frankl.
Viktor Frankl, who was an Auschwitz survivor. And he has a quote, I can't remember if it's in the book or not, but this quote that I love, and he says something to the effect of, in between stimulus and response, there is a space. And in that space, we have the power to choose. And in that choice lies your growth and your freedom. And I think it's more important than ever to think about, how can we pause and think about our choice? Because sometimes in this environment, we feel like we don't have a choice. I can't go out, I can't go to dinner, I can't do all these things, I can't go to the gym. But we do have choice. And even in Auschwitz, when you would think you didn't have choices, he said he had a choice. And that choice helped him survive and helped him go on and touch millions of lives through his book and his teachings. So I'll pause there, Tommy, and we can go any direction you want.
Well, first of all, I want to say, my God, thank you so much, Jim. You just have lit up my heart and my world, and hopefully the folks in this chat bar and this meeting feel the same way. We will make this. First of all, I want you all to know we will make this available as a replay, so that you and your loved ones and others who weren't able to be here today can get to this. So we have a couple questions that I'd like to bring to your attention. One's just very simple. Could you clarify, Jim, whether it's national and or private student loans in the student loan piece?
Yeah, my understanding is, well, it's from the government, so I would assume it's all government student loans. I haven't heard anything on private loans that don't have to do with the government. I would say you'd have to check with your loan provider. But even if it's not government loans, your loan provider may be willing to do the same thing. I'm certainly pressure on them to do the same thing, but definitely government loans. And let me make one other, just a couple clarifications. One is, on that $100,000 you can take out from your IRA or your plan at work and pay back over 3 years, or pay the taxes over 3 years, either one. You do have to qualify, and the way you qualify is you have to be impacted by COVID. Either you caught COVID, your spouse caught COVID, but the other way you qualify is if you've had impact financially on you personally because of COVID. Think about if your job is gone, or your part-time work that used to be full-time, or if your business has been hurt due to COVID. So it's a pretty broad definition, but I just wanted to let you know that you just can't do it. You have to actually qualify in some way. Great. Oh, and the other thing I wanted to just, this bill, the CARES Act, is over 800 pages. So even things I said in a podcast I did a week ago, the Treasury Department came in and changed what was actually in the bill. So anything I say today, in a few days, I might be wrong. So make sure you do your research and you're careful about that. You should be talking to your CPA or accountant, your attorney, your banker, your financial advisor on this stuff as well. Just wanted to put that out there.
Thank you so much, Jim. Someone's asking about the $600, I guess that would be the unemployment, the addition to unemployment.
Yes.
Benefit. You said up to 600. What does that depend on?
Yeah, so I believe, and I said up to 600, I believe they're going to give 600 per person regardless, because I was actually looking, now that I hear that I said it that way, they were doing, in the New York Times had an article about that showing someone that was making $30,000, and actually unemployment, they're making more money than they were when they were working. And that was one of the conflicts near the end of the bill, is that some representatives and senators felt that it would incentivize people not to work because they'd make more money than working. And in the end, I think they decided that, hey, let's not worry about it. Let's get some money to people who need it, and that's it. Now, one thing I didn't cover is the rebate. Maybe I'll cover that really quickly. So the rebate is $1,200 per single person and $2,400 per married filing jointly. But there's an income limitation. So if you make more than $75,000 of income, and by the way they do this is they use your 2018 return, if that's the last one that has been filed. They use your 2019 return, if that's the last one that's been filed. And you can even qualify for this if you don't qualify either of those tax years, and you qualify next year when you file your 2020 tax return. But here are the income limitations. If you make above $75,000 and you're single, that $1,200 starts to phase out and phases out at $99,000 of adjusted gross income. If you're married filing jointly, the $2,400 starts to phase out at $150,000 of adjusted gross income, and completely phases out at $198,000 of adjusted gross income. You also get $500, you get a $500 check per dependent child under age 17. Under. So that means 16, 15, 14, not a 17-year-old. Under 17, $500 check if you're claiming them as a dependent. So let's say you're divorced and the other spouse is claiming the dependent, you are not, you're not going to get that check. So $500 per dependent. Those get phased out at $5, and really all of these get phased out at $5 for every $100 over the threshold. So just as an example, if you had a married filing jointly with one child, they phase out of their $2,400 at $198,000. They phase out at the extra $500 for their dependent child at $208,000, because it takes $10,000 to phase out of that $500 benefit to the dependent.
Okay, so that's a lot of math. So I'm gonna try and play that back to you and see if I got this right.
Okay.
The government is, first of all, do we have to go after this $1,200 and $2,400, or is it automatically sent to you based on your filings?
It's supposed to be automatically sent to you, so you want to make sure the government has a good bank account. You know, if you're doing, like, you did your refund last year to a certain bank, make sure they have the right bank account. If you haven't filed taxes, you can still get it, but you want to go to, I would go to the irs.gov and look for their coronavirus stuff and see about making sure they have your information, get those checks.
Okay, so if I, as an individual, make less than $75,000 a year,
Adjusted gross income.
Adjusted gross income,
Yep.
I should be receiving an automatic deposit into my bank account of $1,200.
That's correct. They think in the next 30 days, we'll see.
Okay. And that starts to get smaller and smaller from 75,000 up to, I think you said 98.
99.
99. Okay.
Yeah, it's $5 less for every $100 over that.
If I am married
Yes.
and my wife and I, or my partner and I, file jointly,
Yes.
then and we make less than 150,000 together,
Yes.
then we will receive this deposit of 2,400, or we should.
That's correct.
And what should we do if that is the case for us, based upon our 2018 tax return, for example, and we don't receive that?
Yeah, well, I would keep an eye on that because it's supposed to come out, and there'll be stuff. I mean, that one part of it is going to be on every news channel, so it should be easy to see about when checks are going out. If you don't get it, then I would go to irs.gov and look at their coronavirus emergency stuff.
Okay.
But you should be getting that check. And just so you know, if you didn't qualify in 2018, let's say you're single and you made $100,000 adjusted gross income, but you do qualify in 2019 and you haven't gotten your tax return done, because you can actually delay that to July 15th. Get it done as soon as you can so that you qualify to get that $1,200 check.
Okay. And then a friend of mine is saying, you're only going to get this directly deposited if you did direct deposit on last year's return.
That's right.
What if you didn't do direct deposit on last year's return?
I think they're going to mail checks, to wherever they mailed the check before.
Okay. So you'll get.
They want to get this money to you, so they're going to try to do it any way they can. But if you moved, right, or your bank, you change your bank account, right? The government's, you don't want them to have to try to find you and take 6 months to find you.
Okay, so that's good. So folks, check into this. You should be receiving a check sometime in the next 30 days or a direct deposit. If you've changed your bank account or your address, you might need to call the IRS. And one thing I want to say about calling the IRS is, contrary to popular opinion, they actually want to help you. They will help you, and they will particularly help you now. So don't be afraid to call the IRS, no matter what your previous situation might be. They actually want to get you this money. So, so reach out to them. That's super helpful, Jim. Thank you so much.
Sure.
So I have a few more questions here just to wrap up our call.
Yeah.
This person says, if I got let go from my job, but my last day of work and paycheck isn't until the end of May, will I still get the 4 months of $600, or does it end on July 31st?
It is through July, and I would hate to mislead that person. So I would say I'm not positive. I think because you are furloughed, even if you have a severance, you can qualify for that. But I would say, if I were you, I would definitely go to your state and see about the requirements for application for that.
Okay, wonderful. And finally, last one. If we qualify in 2018, but income is higher than 75K in 2019, once we file our 2019 tax, we may have to pay the government back, depending on the phase outs after we file our 2019.
Yeah, that's a great question and very insightful. And we don't know, but the general consensus is, and I'll tell you what I would recommend. I don't think they're going to make you pay it back, but what I would recommend is I would wait till I got my check. And then I would put that check somewhere safe. I wouldn't buy something. I wouldn't, put it in the stock market. I would keep that money in case you need it and see what the government does. Most of the experts don't believe they're going to go try to rake that money back from people, but they could. So if you qualify from 18, don't qualify in 19 and haven't filed your 19 taxes, I'd go get I'd wait for the check before I filed my 19 taxes.
Okay.
Now, on the other hand, if it's the opposite, rush out there and file your 19 taxes. I think we already covered that to get that check.
Yes. Final question from me, just because I was curious about this. If you can use your 2018 tax return to justify the claiming of your child as a dependent and getting that extra $500 per child, mm-hmm. What if your child happened to be 16 years old in 2018?
Yeah, I think
but they're going to be 17 in 2019 and they're 18 in 2020.
I would bet that the IRS has that part figured out, so that you're not going to get an 18-year-old who's going to get a check. But you know what? It is the government, so who knows? They could.
I didn't mean to to put that out there for someone to take advantage of the government. Just to say, I was curious. I don't happen to have a 16-year-old or any year-old, so
yeah,
I was just curious about that.
All I can tell you is the law says under 17. It's very specific. So if they send a check to your 18-year-old, then somehow their system didn't catch it right.
Yeah, I don't suggest it. We want to work together on this.
Right.
So we err on the side of honesty always.
Absolutely.
So Jim, incredibly grateful to you for your time and your wisdom. Thank you for all of this information. For me, very informative, very helpful. And I know it's going to be for the hundreds and hundreds of people that are going to see this. And we will put it out as a replay again. And you guys in the chat bar, show Jim some love right about now. Show some love. Share your love right here. Yeah, there it is.
Beautiful. Beautiful.
Yeah, I'm so grateful. All right, so Jim, thank you again, and we'll be in touch soon. And bless you and Mimi. And
thank you.
Be safe.
Yes, and of course, thank you, Tommy, and my best to you and Keith always.
Okay.
All
Blessings.
Right.
Bye for now, y'all.